session, so feel free to interrupt at any time, okay? Alrighty, let me share my screen. Okay. Okay. So today's session is all about building credit, and we're calling it Building Credit from Scratch. We'll give you some tips on rebuilding credit, building it, maintaining it healthy, what lending looks like, and a little bit more tips. My name is Alberto Diosdado, and I am the Director of Administration at Universal City Studios Credit Union. So thank you for joining me today. Okay. Let's see. Okay. Today's agenda, we're going to go over during today's workshop, we'll be taking a look at what credit is, why credit is important, how do you build credit, and as well as busting some credit myths and talk about healthy credit habits to practice moving forward. So the big question, and before we get any further, the big question is, what is credit? So, at its core, credit is an agreement between an individual and a creditor in which the individual receives something now with the understanding that they will pay the creditor back later. This can come in different variety of forms, like a loan, it could be a credit card, or a line of credit. A credit report shows your credit history and the activity on all open credit accounts. This shows how you have handled credit accounts in the past, as well as how you are currently handling credit. Things can typically stay on your credit report between 2 and 10 years, if not longer, if they are open and in good standing. There are three credit bureaus that generate credit reports, and those bureaus are Experian, Equifax, and TransUnion. It is possible that there may be differences between the three reports. Sometimes smaller banks or credit unions and collection agencies only report to one credit bureau and not all three. So it's very important to review all three of them. You can also access free copies of your credit reports from all three credit bureaus at annualcreditreport.com. It is recommended you do so at least once a year to review for accuracy. You want to review exactly what's on there. It'll also help you begin fighting if there's any fraud or submit disputes. You can do this for free once a year. Okay, so what does a credit report include? Your credit report will typically include some personal information like your address, your employer, as well as history and information about your credit accounts, any bankruptcies, any collection accounts, as well as a list of who has accessed your credit reports. And those are known as credit inquiries. So every time you apply and someone tells you, I'm doing a credit inquiry, that means they're going to access your full credit report. Credit report. Your credit report does not include your income. It does not include any assets you may have, any savings you may have, and typically it doesn't include bills like rent or utilities. However, there are now some sources that report your utilities or your rent if they're being paid on time, and that is typically used for folks that are rebuilding or establishing credit. So there is a way that you can connect with the credit bureaus through their app, create an account. You can link your bank account so that way they monitor your utility bills that are coming in and out of your checking or savings account. And if you're paying on a monthly basis, they will report it to your credit to help you establish credit and get some points on there as well. Now, your credit score is typically a three-digit number that uses information from your credit report to help creditors predict how likely you are to pay them back, as agreed, if they choose to extend the credit you're requesting. Basically, creditors use your credit score to measure how risky it is for them to offer you the loan or give you a credit card with a certain available limit. One thing that is very important to mention, just because you have a high credit score, it does not mean you're financially healthy. It's very possible to have a high credit score while carrying a lot of debt and have no savings. Just like it's possible to have a low credit score due to not having hardly any debt, but being financially stable overall. So someone could have a low credit score but make very good income, or the other way, very good income and high um, credit scores, but they're not aligned. Now, some credit score factors. There's five factors that make up and impact your credit score. The largest of it is your payment history. Making every payment on time every month is one of the very best things you can do for your credit score. So 35% of your credit score is going to rely on your payment history if you're paying on time or not. The second largest factor that impacts your score is amounts owed, which includes your credit utilization. Creditors want to see loan balances decreasing, not hovering or increasing over time. This can often happen with student loans or finance personal loans. Also, they factor in a number of accounts that have balances. Credit utilization specifically looks at revolving credit accounts like a credit card, where your balance could go up one month and down the next. Credit utilization looks how much of your credit limit you're using. So essentially, the more credit limit you are using, the more risk you are to a creditor. For example, add up all of your credit card balances and divide them by the total of your revolving limit, and that will get you your utilization number. Ideally, you don't want to use more than 30% of your limits at one time, and you want to pay them off monthly. So if you use a credit card, try your best to, as a best tip, treat it like a checking account where it's a debit card. And if you don't have the funds, don't use it. Length of credit history looks at how long your credit accounts have been opened for. This will include the age of your oldest accounts, the age of your newest account, and an average of all of your accounts. So the longer your credit history, the better. And this accounts for 15% of your credit report. Next is new credit, which is also known as hard inquiries. When you apply for credit, the creditor will typically do what's called a hard inquiry, which is when they dive deeper into your credit report and credit score to assess the risk. If you start applying for multiple new forms of credit frequently and often, this is typically a red flag to creditors because they start to wonder what's going on that you suddenly need a new credit card one month, a new loan the next month, and now you're asking for another credit card this month. So 10% of that new credit accounts for your credit score factor. And finally, credit mix is the last factor that impacts your credit score. Creditors want to see that you have a history of managing different forms of credit at the same time. So, for example, maybe a credit card and a car loan and a student debt. That's one of the smallest this is one of the smallest factors impacting your score, but it can help to have a well-rounded mixture of types of credit when they're all managed responsibly. So again, you can have a mixture of a credit card, you can have a mixture also with a personal loan, you can have a car loan or different factors. So not going too crazy, a bunch of credit all at once. You want to keep it healthy and manageable and be responsible for it. Okay, so overall, you have your credit score factors. Again, this is all about your payment history, the amounts owed, the length of credit history, any new credit, and how well you're mixing and matching or mixing and managing your scores, your debt. Now, what is credit score ranges? So while it's possible to have a zero credit score, if you have no credit history at all, if there is anything on the report, the minimum score would typically be around 300, which would be considered a poor credit score. And this goes all the way through 579. Once you hit 580 through about 669, that's considered fair. 670 to 739 starts being considered good, with 740 to 799 being very good, and 800 plus falling under the category of excellent. The average score in the United States varies a bit from year to year, but almost always falls somewhere in that good range. So that could be anywhere from the 670 to the 739s. So now that we've talked about what credit is and what impacts it, why does it matter to you? Why is credit important? Your credit history or credit score can impact your ability to rent or purchase a home, or even to turn on utilities in your name. Your ability to get and keep some jobs will require a credit check before a job offer is extended, and some will periodically review your credit throughout your employment. This includes, but is not limited to, military clearances. Credit can also impact your ability to open a bank account and, of course, access to any kind of loans, could be personal or vehicle, a home loan, or credit cards, as well as any other miscellaneous things, including your car insurance rates, any cell phone plans, and many more of those little things. Even if you're able to get a credit card or a loan with a lower credit score, you may pay more to have access to that credit. Creditors may charge you a higher interest rate as a way to account for the higher level of risk they are taking on by extending credit to you, considering you have a lower score. For example, we're going to take a look at this chart. This is a chart of interest rates on a 5-year car loan for $20,000. As you can see here, the interest rates, monthly payments, and total interest paid vary dramatically between the poor credit scores and the very good or excellent credit scores. So see, you're going from a 487 monthly payment to down about 366. And the bigger difference is also how much you're paying for the length of that loan. So the lower the score and the longer you keep that loan for, you're going to end up paying more interest rates. So, for example, someone with a 720 could be getting a 3.73 versus someone in the 500 range. They're getting about 16%. That's a big difference. One with the lower score is going to be paying about 9,200 in this example in just interest on top of the principal payment of that loan. Versus someone in the higher credit scores, they'll be paying about $1,900. So that's a very, very big difference. So essentially, someone with a very good or excellent score could save more than $7,000 in interest compared to what they would have paid if their score was considered poor. And $7,000 is a lot of money. So this is a prime example of why building credit history and specifically positive credit history is so important. Now, so really, how does one establish credit or build credit history? One of the first things I always want people to know is that building credit history absolutely does not have to mean going into a bunch of debt. It's absolutely possible to build credit history without carrying large debt balances and paying a bunch of interest. So how? Let's dive in. Okay. So you know how you have to have experience to get a job, but at the same time, how do you get experience without being able to get a job? Credit can kind of feel the same. So creditors want to see credit history to measure the risk level of extending credit to you, but how can you get credit history without having credit extended to you? Similar to getting an entry level job to start building a job experience. There are credit building products that are specifically designed to help you start building credit history with protections in place to help minimize the creditor's risk. So, for example, a loan that I want to show you today, let me take you to our website. Oops. Universal City Studios Credit Union offers a great credit builder loan. Now, this loan was built for people in mind that are rebuilding or establishing credit. Now, this loan, the way that it helps, it was designed to help you establish or improve credit history while at the same time building savings. So whether you're starting credit history or working to rebuild it, this loan is perfect. It's a perfect solution. So the way that it is, once you sign the agreement, once you start getting the loan, um, the funds are gonna be placed into a savings account. Every month that you start making those monthly payments, we're gonna report them to the all three credit bureaus, and this is gonna help you strengthen your credit history. So at the end of the loan, once the loan is paid in full, you're going to have an improved credit. It's going to be established, and your savings account is now going to have all of those monthly payments. So it's going to force you to save and it's going to help you establish credit. And once the loan is paid in full, you actually get those funds and you can do with that money whatever you'd like. Now, this loan is available to members with a maximum term of 48 months up to $10,000 and the rate is 4%. So anybody can get this loan and the member gets to choose their own terms. They get to choose their monthly payments. They get to choose how much they want to borrow slash save, and they're all going to get the 4% rate. Awesome. There are there's other ways. So for example, one way to build credit is a secured credit card, which requires a cash security deposit to open the accounts. This security deposit reduces the risk to the lender because if you don't pay your credit card, they have the money from your deposit to pay it. People with no credit or bad credit often start with a secured credit card to build or establish credit. Deposits are generally low, on average anywhere from 200 to $500, but they can be higher. With a secure card, you're still required to make a monthly payment on time or risk it reporting late to bureaus. Your deposit is not used to pay for purchases, and you are also charged interest on the balance you carry over to the next month. So another one was the credit building loan. This one so like I said, you can't access the money until you have fully repaid the loan, and essentially you're building savings while making your payments. So there's no risk to the lender because if you don't make your monthly payments, we're not going to give you that money then at the end. So it's very important you make payments on time or you'll see negative reporting to the credit bureaus. If someone you trust has a credit card in their name, they could add you as an authorized user to start building some credit history. Typically, accounts where you are an owner have more impact on your credit, but being added as an authorized user can be a good way to start establishing some history. There is some risk in this because if the individual maxes a card out or misses a payment, this is also going to have a negative impact on your credit as well. But if you trust a person, this can be a very good option to start establishing some credit history until you're able to get an account in your name. So, if you are in a situation where you have had credit history in the past, then life happened, your credit suffered, and you're now looking to rebuild positive credit, know that it's totally possible to do so. It'll require some patience, but many of the same strategies we just talked about to build credit from scratch can apply to rebuilding credit after something like a bankruptcy or foreclosure or a repossession on a vehicle, or if you just haven't used credit for 5 to 10 years or longer. If you're looking to rebuild positive credit history and you still have outstanding balances owed, prioritize paying those off. If you have collections or charge-offs, which is when an account falls far enough past due that the creditor begins attempting to collect the full balance owed instead of just the amount past due. They're essentially collection accounts. Work on a plan to get those paid off. The same credit building products we just talked about, secured credit cards and the credit building loans, are a good option to start rebuilding credit as well. Okay, so now credit myths. Part of the reason that building credit can feel so overwhelming is that there is a lot of conflicting information out there. And some of the information out there is a flat out not true, it's false. So let's take a look at a few of the most popular credit myths and why they're not true. First one of the most common credit score myths is that you have to carry a credit card balance from month to month in order to build credit. Not only is this not true, but it is a myth that can actually cost you a lot of money. When you get a credit card statement every month, there is a statement balance and a minimum payment due. To avoid a late payment, you need to pay at least the minimum payment due by the due date. However, if you only pay the minimum payment and there is a difference between that number and the statement balance, when your next statement cycles, you'll typically owe interest on the statement balance amount you did not pay. So, for example, if your statement balance was $50 and your minimum payment due was $20, if you pay those $20, you've made your payment obligation. So you've met your minimum payment. But when your next statement cycle comes around, you're going to be charged interest on that $30 difference. Again, if you pay the full $50 statement balance, you typically will not be charged any interest. Some people believe they must only pay that minimum payment and make sure they are carrying a balance into the next month to build credit, and that is simply not true. I encourage you to get in the habit of paying off the entire statement balance you owe in full when you get your statement each month. This will save you money on interest charges and will help you keep your balances lower, which improves your credit utilization. Remember, credit cards are not extra money. Another myth is that all credit scores are the same. There are two scoring models, FICO and Vantage. Each model determines credit scores differently, and the scores are not the same. Scores can vary dramatically, so keep that in mind. 90% of mortgage lenders use FICO scores when determining credit worthiness and extending credits. Um, Different companies like Credit Karma, Credit Sesame, or CreditWise, they use the Vantage score method. Majority of the time, if you're receiving a free credit score, it's likely Vantage, unless your financial institution or credit card company provides it to you. You'll be able to know what score you are seeing because it will list either Vantage or FICO with that score. Credit Karma might say you have a 710, but when you go apply for an auto loan at your financial institution, we might see 660. So if you want an accurate FICO score, most of the time you have to pay for it. Or you can go to the credit bureaus directly to that's one option. Go to the credit bureaus directly or go to myfico.com. Now, myth number 3. While technically having more available credit limits can help you improve your credit utilization, it's a very dangerous game to play. When you open a new credit card, you have a new hard inquiry and you have a younger account in your length of credit history, both of which can negatively impact your credit score. Also, the more credit cards you have, the trickier it can be to keep track of due dates and make all payments on time. And there is more potential for you to get in over your head with balances spread across multiple cards. While there's no magic number of cards that is best to have. No more than 2 or 3 is typically recommended. Now, some people think after paying off a credit card, they should close it. Well, this can also have a negative impact on your credit score. If you close it, you're going to lose the length of history from that card, and it can also impact your utilization. So once you open a credit card, it's best to keep it open as long as you are managing that card responsibly. Now, we talked earlier about reviewing your credit report and the differences in credit score monitoring tools. We also talked about how applying for credit leads to a hard inquiry, which can start to negatively impact your credit score. So some people believe that checking your own credit will also hurt your credit score. Now, there are two types of credit inquiries. A hard inquiry, which is what a creditor or a lender is typically going to use to see your credit history and measure the risk level of extending you credit. A hard inquiry indicates you have applied for credit and, as we discussed earlier, can start to negatively impact your credit score if done too often. When you check your own credit for educational or monitoring purposes, this is what's called a soft inquiry, and it does not impact your credit score. It is really important to review your credit reports and keep an eye on your credit score so you can react quickly if you notice fraud or if something just doesn't seem right. The good news is that you're absolutely free to do this without concern about impacting your credit score. Now, it's imperative that once you get access to credit, you practice healthy credit habits to ensure you're building positive credit history. So before we wrap up today, here are some important tips on healthy credit habits to practice whether you are starting from scratch or working to rebuild positive credit. As we discussed earlier, payment history is the largest factor that impacts your credit score. Missing or being late on just one payment can have a quick negative impact on your credit score. and it will take a while to build back from the drop. This is why it is important to make every payment on time every month. If you're concerned about keeping track of due dates, I recommend setting up automatic payments so you make sure your bills are paid on time every month. We also mentioned credit utilization, or where your credit card balance is compared to the maximum limit, is the second largest factor that impacts your credit score. Strive to always keep your balances below 30% of that card's max limit. And if you can keep it below 10%, that's even better. Ideally, pay the card off in full every month. Pick one specific small budgeted expense to use your card for every month. Something like gas for your car or a subscription service like Netflix. Use that card just for that purpose, keeping that balance low, and then pay the full balance off when you get your statement for that month. This is a great way to build positive payment history while keeping a low balance and avoid interest if you pay the full statement balance off monthly. Of course, most of us are going to need to apply for credit from time to time, which is understandable. Be sure to be strategic when you do. However, instead of frequently applying for accounts you do not need, which can negatively impact your score. If you do want to shop around for the best rates on something like a mortgage, get all your ducks in a row and apply with multiple lenders in a short time period to have it count as one hard inquiry instead of multiple. This will allow you the opportunity to shop around for the best deal without having more impact to your credit score. So don't apply for new credit unless you need it. Now, collections can stay on your credit report for up to 7 years, and they can have a quick negative impact on your credit score. Collection accounts can include everything from car insurances, cell phones, cable equipment that wasn't returned, medical bills, rental leases broken early, and more sent to collections, and they weigh heavily on your credit. Some people ignore collection accounts because they think that they should not be on there because the bill was paid or it was an error. Taking care of this as soon as possible, as soon as you can, get a past due bill notice is so important. Don't ignore it, because if you don't think it's legit, typically it won't just magically go away, but can make it much harder to take care of in the future. So don't ignore your bills, even if you don't think you should owe it. Now, review your credit reports from annualcreditreport.com annually to ensure everything looks correct and that you are aware of everything that's on there. Checking your credit report and score does not impact your credit score. Reviewing it for educational and monitoring purposes is different from a hard inquiry, which does impact your score. It's important to know credit scores are not on your free credit report. You may be familiar with some of the online tools like Credit Karma that offer credit scores. While these can give you a rough idea of where your score may be at, it's important to take the score provided with a grain of salt, as it is typically not the most accurate or up to date information. If you were to go to a credit union and apply for credit, there's a good chance the score they will be pulling will be different than what you see on Credit Karma. Your financial institution or creditor may have a free credit score monitoring tool available within your account. Check in with them to see if they do. And finally, did I mention that making every payment on time every month is important? This is worth repeating because it really makes a huge difference when it comes to your credit. So make every payment on time every month. Now, I really hope you have a better understanding of what credit is, how it can impact you, and ways to strategically and responsibly build positive credit history. I also want you to know that we partner with a national nonprofit called Green Path Financial Wellness to provide free credit counseling to the members. Green Path's goal is to empower people to lead financially healthy lives, and we recognize that that looks different for everyone. Green Path also has different financial assessments. So I invite you to take advantage of a free counseling session with Green Path Financial Wellness expert to discuss your unique financial situation and goals, which could include reviewing or building a spending plan, reviewing your credit report, and talking about your credit history in specific detail, or discussing student loan options, or exploring options for dealing with debt and any housing concerns or goals you may have. So you're more than welcome to visit our website right there. Feel free at any time, 24/7, or just call them on that phone number. That way you can get connected to a certified financial wellness expert. And that concludes our presentation for building credit today. I will leave my contact information right up on the screen. You can reach me for anything, any questions related to the credit union, or also if you'd like to become a member, reach out to Taylor Bersini, our membership consultant. And thank you all so much for joining today.